Hello and welcome. Today, we are diving into the exciting world of order book analysis for trading. We will be looking at real-world case studies to see how professional traders use the order book to make smart decisions. By the end of this session, you will have a better understanding of how to read the order book, find trading opportunities, and avoid some of the common mistakes that people make. This is going to be a fun and educational journey, so stay with me and keep your mind open to new ideas. Before we dive deeper, imagine having a tool that lets you peek into the minds of traders, revealing where they are ready to buy or sell and at what price. This is exactly what order book analysis offers. Let us start at the very beginning. What exactly is order book analysis? Order book analysis is all about looking at a list of buy and sell orders that are currently available for a stock or asset. It is a great way to see the bigger picture of what is happening in the market. By reading the order book, you can see how many people want to buy or sell, what price levels are important, and where the market might be headed next. Order book analysis helps us figure out where buyers and sellers are, and that can be the key to making good trading decisions. In addition to understanding the order book itself, it is crucial to combine it with chart patterns. Chart patterns are visual representations of price movements that can help predict future market directions. Some of the most common patterns include head and shoulders, double tops and bottoms, triangles, and flags. For instance, a head and shoulders pattern often indicates a reversal in a price trend. If you see this pattern forming while also noticing a buildup of sell orders in the order book, it could be a strong signal that the price is about to drop. On the other hand, a double bottom pattern, which looks like the letter W, suggests that the price may be getting ready to move upwards. When this pattern coincides with a rise in buy orders in the order book, it adds more confidence to the potential price rise. Triangles are another important chart pattern to understand. There are ascending triangles, descending triangles, and symmetrical triangles. An ascending triangle typically suggests a potential breakout to the upside. If you see the price repeatedly testing a resistance level while the order book shows growing buy interest, it could mean that the buyers are getting ready to push the price higher. A descending triangle suggests the opposite, with potential for a downward breakout. In this case, if you also notice a buildup of sell orders, it could be a strong indication of a bearish move. Symmetrical triangles can break in either direction, and combining them with order book analysis can give you better insight into which way the market might move. Flags are short-term continuation patterns that usually indicate a brief pause before the trend continues in the same direction. If you see a flag forming on a price chart and notice consistent buy or sell orders supporting the direction of the trend in the order book, it can be a good opportunity to enter the market with the trend. By combining these chart patterns with order book analysis, you get a more complete view of the market. Patterns give you an idea of where the price might be going, while the order book helps you understand the strength behind those moves. Together, they can help you make more informed trading decisions and improve your chances of success. To make all of this easier to understand, let us jump into our first example. Imagine we are looking at a stock where a very large buy order suddenly appears just below the current price. What does this mean? Well, it is telling us that someone or even a group of traders thinks that this price is a very good value. As more buy orders start to build, the price might stop falling and stabilize right at that point. Eventually, those buy orders get filled, and then something interesting happens. The price begins to rise, and this big buy order acts like a support level. Traders who notice this have a chance to enter into a long position, meaning they are betting that the price will rise. And if they get in at the right moment, they can ride that upward wave. This is a great example of how looking at the order book can help you catch a price move before it happens. When it comes to chart patterns, recognizing these dynamics can add even more depth to your trading decisions. Let us say you observe a large buy order and, at the same time, notice a bullish chart pattern forming. For example, a double bottom, which often resembles a W shape, might start to appear as the price bounces off a support level twice. This is a classic reversal pattern, and when it aligns with a large buy order in the order book, it suggests that buyers are taking control and the price is likely to rise. Such a scenario provides a high probability trade setup because both the order book and the chart pattern are pointing towards the same outcome. Another powerful chart pattern is the head and shoulders. Suppose you notice this pattern forming at a peak, along with a significant increase in sell orders in the order book. This combination can be a strong signal of an impending reversal to the downside. The head and shoulders pattern indicates that the asset is struggling to maintain its upward trend, and the large volume of sell orders provides further evidence that traders are looking to exit or short the position. Understanding how these elements interact can give you the confidence to make timely decisions. Triangle patterns are also key to expanding your trading strategy. For instance, an ascending triangle pattern is typically seen as a bullish sign. The price continues to test a resistance level, and if the order book shows accumulating buy orders at higher price levels, it suggests that the buyers are gearing up for a breakout. This is when momentum starts to build, and being able to spot this convergence in the order book can help you enter the market just before the breakout happens. Conversely, descending triangles with heavy sell orders along the support level can signal an impending breakdown, offering a great opportunity for short traders. Flags and pennants are additional continuation patterns that traders should be aware of. A bullish flag forming during an uptrend suggests a short period of consolidation before the trend continues. When you see consistent buy orders in the order book during this consolidation, it further supports the idea that the upward trend will resume shortly. In contrast, a bearish flag with sell orders showing significant interest can be a signal that the downtrend is likely to continue. Understanding these patterns along with real-time order flow provides insights that are much stronger than using either method alone. One more pattern to watch for is the symmetrical triangle, which can break in either direction. If the order book reveals more buy orders building on the higher end of the price range, this could indicate an upward breakout is more likely. If the sell orders are heavier on the lower side, it might suggest a downward breakout. Symmetrical triangles represent moments of market indecision, and the order book can provide the clue that tips the scales one way or the other. By expanding on these chart patterns and using them alongside the insights gained from the order book, you can significantly improve the accuracy of your trades. The patterns provide a historical view of how the price has moved, while the order book gives a live picture of market sentiment and trader commitments. Together, they form a powerful toolset for any trader looking to improve their market timing and trade selection. Now, let us expand on how chart patterns come into play here. When analyzing this large buy order in the order book, it is also helpful to look for chart patterns that can confirm or strengthen the signal. For example, if you notice a double bottom pattern forming in the price chart while also seeing the large buy order, this combination can be a powerful signal that a reversal is imminent. A double bottom pattern, which resembles the letter W, often indicates that the price has found strong support and is preparing for an upward move. The presence of the large buy order below the current price adds even more confidence to this reversal scenario. Another important pattern to consider is the head and shoulders pattern. If, for instance, you are analyzing a potential reversal and see a head and shoulders pattern forming, it suggests a trend change. This becomes even more compelling if you see the sell orders building up in the order book around the neckline of the pattern, which is the critical support level. When the neckline breaks and the sell orders are substantial, it reinforces the bearish sentiment and can provide a clearer signal to traders. Triangle patterns also tie in well with order book analysis. Suppose you see an ascending triangle forming, which suggests an upward breakout. If the resistance level shown in the triangle is also accompanied by increasing buy orders in the order book, this may indicate that a breakout is about to occur. Conversely, with a descending triangle, if sell orders continue to build up along the horizontal support line, it signals that sellers are ready to push the price lower. Flags and pennants are continuation patterns that can provide additional context when analyzed along with the order book. For example, if a bullish flag forms during an uptrend and you see consistent buy orders filling the order book, it suggests that the uptrend is likely to continue after a short consolidation. Similarly, in a bearish flag, the presence of sell orders during the consolidation can indicate that sellers are prepared to continue pushing the price down. By combining these chart patterns with what you see in the order book, you can gain deeper insights into market movements. Patterns help visualize potential future moves, while the order book gives real-time clues about the strength and commitment of buyers and sellers. This holistic approach can significantly enhance your ability to predict and trade successfully. Now let us shift gears and look at a different type of scenario. This time we have a stock that has been moving up for a while, but then we notice something new in the order book. As the stock approaches a key price level, there are a lot of sell orders piling up. These sell orders begin to dominate the order book, and buyers are no longer eager to push the price higher. This scenario often indicates the formation of a bearish chart pattern, such as a double top or a head and shoulders pattern. For instance, in a double top pattern, the price tries to break through a resistance level twice, but fails each time, creating two peaks at roughly the same level. When this coincides with heavy sell orders in the order book, it adds strength to the idea that the price is about to reverse. The sell orders act as a ceiling that prevents further upward movement, and this is when traders can anticipate a drop. If you had been watching this closely, you could have recognized this double top formation along with the overwhelming sell orders and realized that the price was about to reverse. Another pattern to consider is the head and shoulders pattern, which also signals a bearish reversal. The head and shoulders pattern forms after an uptrend where the price peaks head between two smaller peaks shoulders. As you see the right shoulder forming and notice increasing sell orders in the order book, it is a clear signal that the upward momentum is weakening. The heavy sell orders at this point further confirm that sellers are in control and a reversal is likely. Soon, the price starts to fall back down. The sell orders acted like a wall and the stock could not break through. If you had been watching this closely, you might have realized that the price was about to reverse. This is a great chance to either exit a position or even start a new trade in the opposite direction. Watching how the sell orders stack up can help you make a smart move before the rest of the market catches on. In addition to these reversal patterns, you might also observe a rising wedge, which is another bearish signal. A rising wedge forms as the price makes higher highs and higher lows, but the upward movement becomes increasingly narrow. When combined with a rise in sell orders dominating the order book, it is a strong indication that the buyers are losing strength and a reversal to the downside is likely imminent. Identifying this wedge pattern, along with the buildup of sell orders, can give traders a clear warning to exit long positions or consider going short. By understanding these chart patterns and correlating them with what you see in the order book, you are better equipped to anticipate market reversals and take advantage of trading opportunities. This combination of technical analysis and order flow helps to confirm bearish scenarios, giving you more confidence in your decisions. Another way traders use the order book is by watching for imbalances. Now, what is an imbalance? This is when there are a lot more buy orders than sell orders, or vice versa. For example, if there are a lot more buy orders at a certain price, it tells us that demand is much stronger than supply, and that might mean the price will go up. The opposite is true as well. If there are far more sell orders, then the price might be under pressure to go down. Many traders use these imbalances as signals. When they see a strong imbalance that favors their trade idea, they feel more confident in entering the market. Sometimes the order book can also help us avoid falling into traps. Imagine a stock that looks like it is breaking out above a resistance level and everyone is getting excited. But if you take a close look at the order book, you might notice that there are not many buy orders showing up to support this breakout. This could be a warning sign. Without those strong buy orders, the breakout might not last. And sure enough, the price might quickly fall back below that level. Traders who are looking for confirmation in the order book could have avoided getting caught in a false move. This is why it is always a good idea to double-check what you are seeing on the price chart with what is happening in the order book. Let us talk about something else that has a big impact on the order book. Market makers play a huge role in providing liquidity to the market. They place both buy and sell orders and help keep things moving smoothly. But there is something you should know about them. Sometimes you will see very large orders pop in and out of the order book. These are often from market makers who are managing liquidity, not because they really want to buy or sell at that price. It can be easy to get fooled by these big orders. Recognizing when market makers are at work can save you from making decisions based on orders that do not really reflect what the rest of the market wants. Another interesting concept is something called hidden liquidity. Have you ever heard of iceberg orders? Iceberg orders are large orders that are broken into smaller pieces to stay hidden from other traders. Imagine you are looking at the order book and everything seems pretty thin, but somehow the price keeps reacting as if there is a lot of buying or selling going on. This is often because of iceberg orders. Only a small part of the order is visible at a time, but behind the scenes, there is a much larger order that is affecting the price. Knowing that these hidden orders exist can help you be cautious and avoid getting tricked by what looks like a quiet order book. Now let us look at another example. Imagine a stock that is experiencing high volatility because of an earnings report. The order book becomes very dynamic during times like this. You might see large orders appear and disappear very quickly, and the market can seem chaotic. But even in these situations, if you look closely, you can still find important support and resistance levels. Large buyers and sellers step in, and their actions can stabilize the price. Traders who keep a close eye on the order book during these moments of high volatility can find opportunities to trade with better precision. It takes some practice, but learning how to stay calm and read the order book even when the market is moving quickly can really give you an edge. Let us also talk about some of the common mistakes that people make when using the order book. One mistake is overreacting to large orders. Just because you see a big order does not mean the market will move in that direction immediately. Sometimes those orders are just sitting there, and they may even get cancelled before anything happens. Another mistake is focusing only on the best bid and ask prices. It is very important to look deeper into the order book to see the overall market depth. This tells you where the major buying and selling interest lies. Furthermore, traders often overlook chart patterns when analyzing the order book. Patterns like head and shoulders, double tops, triangles, flags, wedges, and pennants can provide additional context for understanding market sentiment. Let us go into more detail about these patterns. The *** head and shoulders ** pattern is a reliable indicator of a potential trend reversal. It typically forms after an uptrend with a peak head flanked by two smaller peak shoulders. When you see this pattern forming along with increased sell orders in the order book, it can indicate that buyers are losing strength and a bearish move is likely. This is especially true if there is significant selling pressure around the neckline, which represents the key support level. A ** double top ** pattern, on the other hand, suggests that the price is struggling to break through a resistance level. It resembles an M shape and forms when the price hits a peak twice but fails to break higher. When this pattern is accompanied by an increase in sell orders in the order book, it serves as a strong confirmation that the price will likely reverse to the downside. Similarly, a ** double bottom ** pattern, which looks like a W, indicates a potential reversal to the upside, especially when matched with a buildup of buy orders at a support level. ** triangles * are another group of patterns that can offer insight. An ** ascending triangle * is a bullish continuation pattern where the price repeatedly tests a resistance level, forming higher lows in the process. If the order book shows increasing buy orders building up below the resistance level, it reinforces the likelihood of an upward breakout. Conversely, a ** descending triangle * is a bearish pattern that forms during a downtrend. It features a horizontal support line with lower highs. A buildup of sell orders around this support level can confirm a downward breakout is imminent. ** symmetrical triangles **, which have converging trend lines, can break in either direction, and the order book can provide clues as to which side has more pressure, offering traders a better understanding of which direction to take. ** flags and pennants * are continuation patterns that often appear after a strong price movement. A ** bullish flag * forms when the price consolidates in a channel after a significant rise, suggesting that the trend will continue. If buy orders dominate the order book during this consolidation phase, it indicates that the buyers are preparing to push the price higher once again. In contrast, a ** bearish flag * forms in a downtrend, and if paired with increased sell orders, can suggest that the price will continue to drop. **, pennants * are similar to flags but have converging trend lines, and they indicate a potential continuation of the current trend as well. ** wedge patterns * are another key tool for traders. A *** rising wedge ** is typically a bearish pattern that forms as the price makes higher highs and higher lows within an increasingly narrow range. This suggests that upward momentum is weakening, and if accompanied by rising sell orders in the order book, it could indicate a reversal to the downside. Conversely, a ** falling wedge * is considered bullish and forms when the price makes lower highs and lower lows, but the range becomes narrower. If buy orders begin to accumulate during this pattern, it often signals an impending breakout to the upside. Combining these patterns with the insights from the order book can help validate potential moves and avoid false signals. For instance, a double top formation combined with increasing sell orders strengthens the signal for a potential downturn. The last mistake is relying only on the order book without considering other tools. Order book analysis is powerful, but it is not perfect. It is always a good idea to combine it with technical analysis, news, and volume data to get a more complete picture of the market. If you are just getting started with order book analysis, I have some advice for you. Practice is the key to getting better. You can use a demo account where you do not risk real money to practice reading the order book and spotting trends. Take your time to review past trades and see how the order book behaved in different situations. And do not be afraid to try different types of assets. Stocks, futures, and even cryptocurrencies all have order books, and each one behaves a little differently. The more experience you get, the better you will understand what to look for. To sum it all up, order book analysis is all about understanding the real-time flow of buy and sell orders. It gives us insights into supply and demand, helps us identify key levels, and shows us the overall market sentiment. By reading the order book over time, you can start to make more informed decisions. But remember, always confirm what you see with other forms of analysis. This will give you a more complete view and help you avoid falling into common traps. Before we wrap up, I want to say this. Order book analysis can seem a little complicated at first, but with time and practice, it becomes much more natural. Keep at it, study real examples, and practice as much as you can. Over time, you will become more confident in using this tool, and it will feel like second nature. The more you practice, the sharper your instincts will become, and you will start to spot opportunities that you may have missed before. Stay focused, keep learning, and I am sure you will do great.